Business, wealth, and strategy, where smart entrepreneurs build lasting wealth. Welcome to Business and Wealth Strategy, where smart entrepreneurs build lasting wealth. I'm your host, Karen Newton, and today is part of our Friday Economic Strategy series. We're diving into a topic that blends politics, markets, and economics. Why Trump hit the brakes on tariffs and what the bond markets had to do with it. If you've ever wondered how behind the scenes financial forces can pressure even the most powerful governments into changing course, this episode is for you. Let's start with some context. Just a couple of weeks ago, former President Trump announced a sweeping new set of global tariffs aimed at protecting US industries and rebalancing trade relationships. But the announcement sent shockwaves, not just through the media or among global trading partners, but deep into the financial markets, especially the bond market. While the headlines were focused on trade war fears, supply chain issues, and political posturing, the bond market was already reacting behind the scenes, and violently. Yields on US Treasury bonds surged, meaning investors were demanding higher returns to hold government debt. That's not a good sign. It means fear, uncertainty, risk. The cost of borrowing across the board was about to go up. And if there's one thing the economy hates, it's expensive money. Most people talk about the stock market like it's the center of everything, but in reality, the bond market is the true heavyweight. Now, let me explain why. The bond market is where governments borrow money. It influences interest rates. It affects corporate borrowing, mortgage rates, business expansion, and more. And critically, it reflects investor sentiment about long-term economic health. So when bond markets spike the way they did after the tariff announcements, it's a warning sign, and it's a big one. Investors were essentially saying, we don't like where this is headed. We expect economic pain, recession-level pain. Now, here's where it gets really interesting. Trump is many things, but he's not deaf to the markets, especially not one that's foundational to economic stability. Reports emerged that even he referred to the bond market as tricky. Less than a week after the initial tariff shock, Trump hit pause, a 90-day delay on most of the planned tariffs. So why the sudden change? Bond market pressure, plain and simple. Former JP Morgan strategist Marko Kolanovich, I hope I got that right, stated it clearly. The disruption in the bond market did the most to shake the administration's stance. That's how powerful the bond market is. It can override political momentum when it signals serious economic risk. So let's break that down a little bit further. Tariffs equal cost increases equal inflation. Inflation equals Fed pressure and higher rates. Higher rates plus higher costs equals slowdown or recession. The bond market priced all of this in immediately, and the administration didn't want a collapse in the economy heading into an election cycle. One thing I always emphasize is this: follow the money. During the tariff announcement, there was a massive inflow into long-term treasuries, a classic flight to safety. The yield curve began to flatten, even invert in some places, signaling recession fears. Corporate bonds started seeing widening spreads. Investors demanded higher compensation for risk. This is the equivalent of the financial system pulling the emergency brake. What followed? Market commentary, media pressure, and within days, a policy reversal. That's how fast money moves and how quickly policy can respond if the right pressure points are triggered. So what does this mean for entrepreneurs and investors like us? Well, there are three big lessons to take away. The first is watch the bond market, not just the stock market. Bonds tell you where the money is going and why. It's a leading indicator of economic health. 2. Policy is reactive. Politicians may tough talk, but when markets shake, they listen. Learn to spot the shifts early. And point 3, economic policy can turn on a dime. If you're making business or investment decisions based on old assumptions, you might miss the change. That's why I include economy strategy each Friday, so you stay ahead of the curve, not behind it. So, what am I doing as the markets have been reacting? Well, one, I've taken this as a signal to remain cautious but not fearful. I'm continuing with PCA monthly dividend share investing, watching for buying opportunities if volatility returns. I've slowed expansion in certain areas until we see more policy clarity, and I'm watching bond yields daily because that's where the next move will signal itself. If yields start to settle and drop, markets may stabilize. If they surge again, we could be heading for more volatility and even another reversal from Washington. So to wrap up, Trump's 90-day tariff pause wasn't about politics. It wasn't about diplomacy. It was about money. And the bond market sent a message loud enough that even the most aggressive policies get rolled back. If you've enjoyed today's episode, please subscribe, share it with a fellow entrepreneur investor, and don't forget to leave a review. I'm Karen Newton, and this is Business and Wealth Strategy, where smart entrepreneurs build lasting wealth. I'll see you next time.